in the beginning an extra income. I've never even thought that day trading cryptocurrencies could actually be a full-time income for me in the future. I didn't even know that it actually is an income that a normal university student can do. That's how I transitioned from computer science to trading. Probably you will lose the funded account the first time you will get funded, even if you get a couple of payouts. So instead of focusing on I will change my life, rent that villa or whatever, when you get funded, save that first payouts to a live account. So you go from a really decent income per month to zero. So that's scary. You need to know, number one, your EV, expected value of your strategy. You need to know what's the longest losing streak you've ever been, success ratio, average risk to reward that you go, dynamic drawdown. Most people, they rush on buying challenges because they think that capital is the problem. When they trade, they are not profitable. And that's the fairy tale prop firms sold us, because anyway, prop firms make most of their money from people losing those challenges. Usually what you say, I'm not good enough, that's why I don't pass the challenge. And this starts messing up with your head, and that's when mistakes are happening. That amount was a decent amount for me, so I was emotionally attached. This is a mistake that I've seen a lot of people on, putting all of their life savings or a big portion of their life savings to buy a challenge, and then they either are stuck for years or months in that specific challenge, or even worse, losing it and then start getting into debt. If I have two stop losses in one day in the same account, I don't trade that account. Every 2% I'm up, I withdraw, especially with bi-weekly withdrawals. You should do that. And it's the same strategy for three different assets. When they are losing, they are becoming more aggressive. When they are making money, they are becoming more aggressive. Like, oh, I'm gonna make money forever. Now, I heard stories of people going in prop firms and getting a huge slippage. They were supposed to lose 1% and they lose 2%. That's insane. You shouldn't be on that prop firm. Definitely, we are in an AI hype environment because everybody is right now saying they use AI. Everybody's focusing on AI. And I'm not saying AI is not as important as people say. I think it's not as advanced as people expect. Definitely, we are in an AI hype environment and also maybe AI bubble.
Welcome everyone. Today I have someone on the show who made a decision most people only dream about. He had completed his computer science degree and was looking for a job, and then he just switched away from the career and he just went into full-time trading. He's trading Forex and crypto. He is a verified funded trader and teaches on XM platform. So please welcome Kyriakos. So please introduce us about yourself.
Pleasure to be here. So, yeah, first of all, like you said, my background in theory is in computer science. So I was studying in the University of Cyprus computer science. And at the point of where I was finishing my bachelor's degree, I was looking for ways to generate, in the beginning, an extra income. I've never even thought that day trading cryptocurrencies could actually be a full-time income for me in the future. I didn't even know that it actually is an income that a normal university student can do. And when I've seen for the first time Forex, I come from Cyprus, so we have a lot of brokers here, it's more familiar. I thought, okay, let me try this Forex thing. In the beginning, I've lost money, I believe, like most people. And long story short, I got connected to the right education and academy. I got educated at it while being a university student and working as a barman. And I've made the transition of actually focusing full time on trading and crypto. That was back in 2020, a little bit before COVID actually hits, because I've seen that, okay, I'm making a decent income for Cyprus standards and I'm investing a couple of hours every single day. What will happen if I invest it as a full-time career? And that's how I transitioned from computer science to trading. And in the last 5 years, we've scaled, we've built capitals, we've also grown our organization with our educational company of over 1,000 people globally. And right now I'm focusing on and working also with XM Live Education, where I'm teaching thousands of people about cryptocurrencies and crypto and Forex trading.
Okay. So let me start your journey. Like, you had you are looking for a job and then you just switch back to full-time trading, and then what you did, like you went for funded trading, like prop firm trading. So what does it change about it? Like maybe you would have tried trading on your own capital and then you switch back to prop firm trading. So what are the difference between them? Like how do you like manage risk, all those things?
Yeah, so when I got started, actually, prop firms, funded accounts back in the day wasn't a thing. Like we didn't even know that it existed. So we're trading our own capital. And I've done some nice results trading my personal account. And in Cyprus, having €1,000 a month, for example, as an income is a pretty good income, and especially if you're doing it from the comfort of your home. And that was like the first level that I've reached with personal accounts. And then back in 2020 to 20 to 21, that was when we first heard about prop firms and funded accounts. And I was in a convention we organized in London. I've met some of my colleagues there from different countries, and we started talking about it. And I thought, okay, that's a good way for me to scale my income to way higher levels with the same amount of hours. Now, the difference in risk is, I mean, there are a lot of differences, but the most important thing that it's something that I recently realized is prop firms funded accounts are not the goal, shouldn't be the goal. They are just the tool to scale your personal capital faster. And I've seen this because everybody right now is focusing, oh, I need to get funded. My life will change if I get funded. And that's completely wrong. So the first thing that we need to always have in mind is probably you will lose the funded account the first time you will get funded,
Right.
even if you get a couple of payouts. So instead of focusing, oh, I will change my life, rent that villa or whatever, when you get funded, save that first payouts to a live account. That's a mistake that I personally did in the beginning, which I didn't save up. I had a really nice income with multiple 600, and you lose it in in a moment, and you go from a really decent income per month to zero. So that's scary. Now, when coming to the question of risk management, how do you manage risk on funded accounts? You need to know, number one, your EV, expected value of your strategy. You need to know what's the longest losing streak you've ever been. So, for example, you need to track that. So, for example, my longest losing streak I've ever been was 8%. Let's say you're assuming you risk 1% per trade, it's 8% down. And also, of course, success ratio, average risk to reward that you go. And another thing you need to measure is the dynamic drawdown, because many times this can invalidate the maximum daily loss which is allowed by prop firms. And the reason that you need to have all this data in mind before even buying a challenge, and you need to gather all of this data, expected value, maximum drawdown that you ever had, the dynamic drawdown that your strategy maybe ever had the highest, risk to reward, your success ratio. So you can decide what percentage per trade you are going to go with in a prop firm, in a challenge, and then in funded accounts. And most people, they rush on buying challenges because they think that capital is the problem when they trade and they are not profitable. And that's the fairy tale prop firms sold us, because anyway, prop firms make most of their money from people losing those challenges.
Yeah,
And I'm
right.
not saying, and I'm not saying don't go buy a challenge or don't use prop firms. I'm using prop firms, but use them the right moment, the right way. And once you find all those data by first trading in a live account, even if it's €100, then you can decide, I'm going to risk 0.5% per trade. So that way, upfront that based on your numbers and data, you're not going to invalidate the maximum daily drawdown and neither the maximum drawdown of the account. Can it happen? Yes, maybe you get a higher losing streak that you've had so far. And that's why I said you will probably lose funded accounts. That's why you need live account.
Okay, so my next question is like before you passed your first prop firm challenge,
Mhm.
like it's not like people go and head and you just go for the first challenge and you pass it, but lots of people are trying and they're making lots of mistake. So did you face this same situation when you were like looking for like, going for the prop firm challenges? So what were the mistake you keep on going and doing it? And once you passed out your first challenge, what was the difference in between them? Like, did you change your strategy?
Yeah, so the first thing, what was the mistake, that kept me repeating on trying the challenges? So the first one for me, back in the day, the first challenge and the first funded account I had, it was the prop firms were giving you a deadline. You need to make X 10% in 30 days.
Okay.
And that was very stressful because in the markets you don't know when the opportunity will come, and you're like in a countdown. Now this doesn't exist, and thank God, but they brought other rules to get your money so you fail. But yeah, that was the catch back in the day. And for me it was not so much of losing challenges at the beginning as on taking them on repeat month after month. And even if you make 3% a month, you don't pass the challenge because they needed back in the day, they needed, I think, like 10% in 30 days, or yeah, I think it was 10% in 30 days. So imagine being profitable, but for 6, 7, 12 months, not passing a challenge. What that does in your psychology, you don't objectively see, as if you don't review your journal, you don't objectively say, I'm profitable, I'm professional. It's just that they ask too much. Usually, what you say, I'm not good enough. That's why I don't pass the challenge. And this starts messing up with your head. And that's when mistakes are happening. But if you see your statistics, you're like, I'm making 3% every month. And if you have a live account, you also still get paid even if you don't pass the challenge. And that's the mistake that most people do. And I was doing back in the day. Now, another mistake I did actually was funded, getting paid. And in the moment where I had multiple six figures, I lost all of them for different reasons. It was when the war of Ukraine and Russia started to be a big thing back in the day. And what I've done is I invested a decent amount, few thousand euros, to buy a few multiple six figures funded. But back in the day, on that moment, that amount was a decent amount for me. So I was emotionally attached on that, let's say 4,000 euros. How much was it for 200K? And what does that in your psychology if you're so much attached on the amount, whatever amount you put in a challenge? Maybe it's just 500 euros for a 100K challenge. You don't objectively follow your plan. And this is a mistake that I've seen a lot of people on putting all of their life savings or a big portion of their life savings to buy a challenge. And then they either are stuck for years or months in that specific challenge, or even worse, losing it and then start getting into debt. And many times I've seen traders in that loop, which are profitable. They are making 3, 4% a month, but probably you're not getting funded because they are asking at 10%. So my point is, when you're buying a challenge, ask yourself, if I lose the challenge, the amount I paid to get it, is it going to affect me emotionally? If even it's going to be a yes in the slightest, don't buy that. For example, if it's a 500 euros and you'll be like, maybe I will feel bad, go for the 50K challenge or 25K challenge. And also at the same time, another rule I have in our community and students, whatever amount each time you pay for a challenge, put it in a live account.
The best way is you can keep a journal of it, like you said. And instead
Correct.
of going for 500K challenge, you can start with like smaller amount. So you get more chance of, trying it and make sure you don't get attached to the money you paid it.
Exactly.
Yeah, so that if you are losing on the first time, and then it will be in your mind running psychologically, okay, I just lose this one, I want to recover in the next funded challenge, and then this goes on. Okay, so coming to my next question will be, let's say while as a funded trader, when you're trading, some week it goes like you are making 4% gain on it, profit on it, and on the next day in the same week, maybe on the next week, you're going like 3% down. So how do you like judge both of things? Like, do you have a limit? Okay, if I'm trading today, if I'm making 4% or something, I'm okay with that. And if you're losing something like 3%, I'm down today, I'm not going to stop. Like, I want to try more or something like that. What's your psychology behind this?
So yeah, let's assume if I am in a 4% profit. So for example, I took two trades and I got a 1 to 4 risk reward, or one to trade full volume and it hit 1 to 4. And then the next day I am 3% down. Actually, I would never be 3% down in a day, because I have a rule that if I have two stop losses in one day in the same account, I don't trade that account. And also, if I have five stop losses in a week consecutively, I stop trading for that week. And I have these rules so I can minimize the losing streaks. Now you may be thinking, okay, but what if the win comes? But that's when you need to know beforehand when you stop. Now I don't really have a ratio on how much I make and I stop in my live account, but in a funded account, I always make every 2% I'm up, I withdraw, especially with biweekly withdrawals. You should do that. Now, if you're thinking, but that's not a lot, let's say you have a 10K account, imagine that that's 4% per month if you get 2% every 2 weeks. So that's like you make in a month what banks pay you for 5 years. And if you have 10K accounts, so the payment is not so much, don't wait with one payment to change your life. That's the mistake most people do. So we always have rules on how much you're willing to lose. As for example, me, I have two trades per day, two stop losses per day, I'm done for the day, five stop losses per week, I'm done for the week. I'm always risking 1% per trade. And another rule that I have is I don't have one strategy or one account and trading all the strategies in. I have a portfolio of accounts. So let's say I have a strategy, for example, my swing strategy for Euro USD, GBP USD, and Bitcoin. And it's the same strategy for three different assets. I have three different accounts. So that way I minimize the potential maximum drawdown that I can have.
So we have seen that in market there are like AI tools are there now, like automated signals, like bots are there, AI tools are there. What's your view on this? Does this genuinely help you as a funded trader, or is it like, do you want to stick back to the manual trading?
So first of all, I am manually trading, but yes, I'm using AI tools to help me with my analysis and reduce the amount of time I invest in front of the charts. Now, what I'm using when it comes on AI is scanners. So is tools with backend coding that analyzes the market 24/7 and gives you potential opportunities, but then I go on my behalf and go with confirmations to confirm if that potential idea the scanner gave me is actually worth taking or not. And this is something I've been teaching to our students in our training academy, which that way, you reduce the amount of time you invest on technical analysis, and at the same time, you increase the efficiency and expected value.
So it's like a AI scanner which is going to scan entire the market based on the indicators. Let's say if I say um, let's say a golden ratio, if it is meeting, then you can scan
Mhm.
out of 500 symbols, you can scan and 50 if they are meeting those criteria, and then it comes to the next criteria. Is it that kind of AI scanner you are using it currently, or
Pretty much, yeah. So it
similar to?
it runs some algorithms on the backend, and gives you an idea, bullish, bearish, for example. And you know that, okay, if it suggests me for, okay, we are bullish, potentially you can buy, but then I go and I'm checking, okay, it's actually 5 steps, 1, 2, 3, 4, 5, and I execute only if all of the 5 steps are confirmed after the AI gave me the potential idea. So it's not like I'm against AI. I think we are just really new to this, really early to this. And most of it's hype and noise just for people to make sales, get your money. So you shouldn't trust it blindly. You should follow it, but always put your own critical thinking. And if you think, I'm going to trust it blindly, okay, trust it to a small live account, do it for 12 months, connect it to my FX book, see the statistics, and if you're happy with it, then go buy it with a prop firm. But then you have other things with prop firms, you know, the IP, the maximum allocation of capital. So if, for example, this AI scanner, a lot of people are using it, there is a potential for the max allocation to that specific prop firm to be met because there are algorithms on the prop firm side. We'll see that, okay, these multiple accounts trade the same way, but it's from different people, which is not allowed in most prop firms. And that's how you most of the times get banned. So yeah, I'm not gonna say skeptical, but careful when it comes on that.
Okay. So my next question is like, you have been trading prop firm from like long year, and you're an funded trader. So I just wanted to know, like, what is the exact movement inside a challenge where most of the traders blow it? Like they buy that challenge and that they blow it. I'm not saying about the strategy, but kind of decision, what makes them blowing it. In previous like case you mentioned about they don't generalize, they don't make generals for it, but what are the different cases mostly found in the trader that could be the reason that most of the trader blowing their account?
I mean, the first thing, like you said, most traders don't journal. So if you don't journal, number one, you don't know what's the longest losing streak you've ever been, or at least back test, you know, with your strategy, go 1 year back in data. Because if you don't know what's your longest losing streak, if, for example, is 8 consecutive trades, it means you are not going to risk 1% per trade because you can easily go to -10. And going to -10 is not something end of the world thing. It just happens as long as your strategy has expected value positive. But if you don't journal that, emotions start getting in the game. Like we've said before, you blow one account, you're like, oh my God, I'm not a good trader. You buy another one. Most probably you blow it again because emotions get into the game. So the first thing that I see is a challenge that most traders leads most traders on blowing challenges and funded accounts. They don't know their data. And number two, always be conservative. Like I see a lot of traders, when they are losing, they are becoming more aggressive. Or when they are making money, they are becoming more aggressive. Like, oh, I'm going to make money forever. But the reality is you should always, at least from my personal opinion, I know there are people that they are changing how much they are risking. At least for me, you should always risk the same thing. So your risk to reward and your data can come into your aid. So what I mean by that, if you're 5 trades in a row in a loss, it's okay. Keep taking the trades that meet your criteria. If you have a positive expected value in your strategy, eventually the numbers will switch. And I've seen that recently, like in the beginning of the year, I was -8 on an account with one of my strategies. And, you know, I kept taking the trades like I was at a break even because I trusted. But at the same time, I knew that I can lose this, you know, I can lose this challenge or I can lose this funded. But that's part of the game. And at the same time, if you have a live account, which you consistently follow your strategy and consistently withdraw money, even if it's a small amount, even if you blow a funded account, you don't feel I'm not a good trader. It just happened and the losing streak was longer than expected. but you're still making money on the live account. And even if you don't make money on the live account, you probably don't blow the live account if you follow proper risk management. So, you get the point. Like, you may be in a drawdown, so your live account is down, you blow a funded account, but your psychology is different because you're like, it's just the phase. My numbers will turn around, and eventually they always do. If you know your strategy, follow your data, the numbers will always, in the end, be on your benefit. And that's when, the psychology stays on game.
Yeah, so it's more like that people doing for revenge trading, like you said, and also
Yes,
having
exactly.
kind of fake hope when you're losing, but you have that hope of that 8% you are down, but you have an hope, okay, the next trade you're going to make it. But that fake hope is also an issue, and you
Exactly.
have to have that consistently. You need a strict rule that I don't want to trade if I'm going below this percentage. That depends on traders, whatever that case can. Okay, so now looking at today, like current situation which are going on, about US and Iran tensions are going on, and the Strait of Hormuz oil pricing, price is moving on. So as a prop firm trader, how do you trade in this environment? Because you mentioned in past about Ukraine and Russia war, you have gone through already, but what about this situation? Are you capable of coping up? And how do you see what's your view on this for new traders, platform traders who are going to trade in this market?
So you need to be careful, and that's not the market environment that you can become loose and over trade, over risk, or not follow your plan. So if you're a new trader, limit the number of trades you take per day, sorry. For example, for me, I have, like I said, multiple strategies on different accounts. Each strategy, the maximum trades I will take in a day are two. If I have two stop losses, I'm done for the day for that specific strategy. And by doing that, you will never violate, the daily loss limit that the prop firms give you. Because if you risk 1% per trade, sometimes I even risk, depends on the account, I even risk 0.5%. But even if you risk one, the maximum drawdown you will go is 2%. Let's say you have a deviation, you go at 2.4%. Let's say you had a 20% deviation, you still don't violate the daily loss limit. Now, I heard stories of people going in prop firms and getting a huge slippage. They were supposed to lose 1% and they lose 2%. That's insane. You shouldn't be on that prop firm. And that's why you should always buy small at the beginning if you don't trust the prop firm. And then with the profits of that small funded account, go buy a bigger one.
So one more thing we know about this AI is going like AI bubble or something we can say. Like currently, if you see Nvidia market capital is so much high that it's more than GDP of any developing countries. So the valuation are set as historical high price right now. So as a trader, what's your views on it? Like, are we in a bubble phase right now, or is it going to pay off in future?
So actually, that's a good question. Definitely, we are in an AI hype environment.
Okay.
um, because everybody is right now saying they use AI. Everybody's focusing on AI. And I'm not saying AI is not as important as people say. I think it's not as advanced as people expect. That's why you should always have your own critical thinking, be objective, have your system, even if you're using AI on trading. Now, when it comes to Nvidia or any other companies, I think Nvidia in the long run will pay off, but it depends on your expectations. Don't expect it to pay off like it paid in the last 10 years. It won't happen. And I wouldn't be surprised if eventually it was a bubble. We go lower, but then eventually we will go higher. So maybe we just do a liquidity grab on that specific stock or in general on the AI hype. But then with that liquidity grab, let's say, most of those AI companies that basically was just air or promises or didn't work like they were promising would shut down, but the ones who are here to stay and they build a nice product will stay for the long run. So actually, maybe like you said, maybe definitely we are in an AI hype environment, and also maybe AI bubble.
Yeah. Okay. So now we'll be wrapping this up. And what will be your one piece of advice for every trader who is watching this right now? And how can people find you if they want to, connect with you?
So my one piece of advice, guys, is don't don't fall in love with the utopia of funded accounts and prop firms. This can definitely burn you. Again, leverage them to scale your capital, but it's not the goal. The goal is to build your own live account. So for every 100 euros you spend to buy a challenge, put it into your live account. And you may be thinking, but Kyriago, 100 euros in a live account, it's not tradable, it's not worth it. Don't trade it, just put it there, let it sit. It will build up itself eventually. And you will, without even understanding, years later, you will have 6,000 euros sitting in a live account without even trading them. And you may be thinking, okay, now I can trade it if your system is profitable and actually have an income from trading even without being a funded trader. So don't focus on challenges so much, guys. And don't rush to buy a challenge. Now, where you guys can find me, I'm active, posting every single day on all social media. You guys can find me on LinkedIn, Instagram, TikTok, Facebook, and YouTube. On my handle, if you guys want to find me, is on LinkedIn, YouTube, Instagram, and Facebook. Kyriakos Kyriakides official, one sentence. And also, you guys can check out my website, kyriakoskyriakidesofficial.com. And
Okay,
on TikTok,
we will put that in our description that so that users can find it out.
perfect.
And
Yeah.
yeah, so that was guys, Kyriakos. He that was nice meeting you, and we had
Nice
discussion
to meet
about the
you
prop
too.
firm. We come to know what are the challenges as a trader. People are like most of the trader are facing. What are they're making those mistakes, and those how they can focus on those things and improve their trading strategy or their skills psychologically, even that. So thanks for this. Thank you for being here.
Thank you so much.